what is simple interest. For example, you are going to invest, let's say 10,000, and made a promise that bank will give you, for example, 8%, and you are depositing for 2 years. For how many years? 2 years. So in simple interest case, what would be the case? That 10,000, okay, and you will get, for example, for 8%. So that would be the case, or how much interest you would get? It would be 80. So 10,000 multiply plus 80, and you would be able to get 80 rupees extra at the end of 1 year. Whenever you will move on to next year, that was the case of year 1. That was the case of year 1. Now year 2, the scenario would remain same. 10,000 multiply by 8%, 80, and 10,000 year 80, you would be able to get 10,080 rupees. Or you can say for 2 years you will get same. For example, if you are investing for a 5 years, so in each year you would be able to get 80 rupees. So 80 plus 80 in case of 2 years. So how much amount you would get? 160. This is the case of simple interest. This is the case of simple interest. So if you move on to case number 2, which is known as compound interest. Compound interest. Same example I will take. For instance, you are investing, or you are going to deposit 10,000 and made a promise that you will get, this is year 1. Remember that this amount is known as your principal amount. Your deposit or actual amount, deposit or investment amount known as principal amount. Okay, so in case of compound interest, year 1, bank made a profit. That was a case that, just give me 1 minute. Okay, what they were saying, that bank said that they will give you, for instance, 8%. So if we multiply by with 8%, you would get how much? 80, and 10,000 plus 80, that would be the case for year 1. Okay, but whenever you move to year 2, scenario would be slightly changed. Now compound interest is known as interest on interest. Okay, that actually simple interest was actually based on your principal amount, which you would deposit in your base year, or you can say when at the start of the year, the amount you were spending in each year, you will get interest on that particular deposit. For example, you were investing 10,000. So it doesn't matter if you are depositing or if you are investing for 5 years, every interest rate will be count on your principal amount. But in case of compound interest, the last or at the end of 1 year, when we will add interest into principal amount, that become the principal amount for the next year. So 10,080 multiply by with 8%. Okay, so we have a particular amount, and let me calculate how much amount we will get. You need to calculate that, and then plus that particular amount, we have a specific amount. Let's say we have, for example, we have 170. Now if we are investing for 3 years, so for year 3 the principal amount would be the amount of year 2. And what is the amount we have? That particular amount, for example, 10,170, and then we will multiply by with 8. We have a particular amount, and 10,170 plus that particular amount, and we have this one. So when you will make a comparison, you have a higher amount in compound interest. Why? Because it is based on the interest on interest. Okay, so that is the difference between two interest rates. The first we discussed the simple interest, and other one we discussed compound interest. I hope you are getting this idea. So now we are moving to the concerned points. Let's draw a stream to get better idea that what does it mean, or you can say draw a better idea to understand the time value of money. All these amounts 1, 2, 3, 4 and 6, all these figures starts from 0 to 6, known as intervals, and this line is known as timeline. Okay, what does it mean? This line is known as timeline, or you can say interval makes that timeline. Okay, so what does it mean? Let's start from that point. This is 0, and this is known as base year or year of principal amount, or you can say year of investment, Okay, whenever you are going to invest or you are going to deposit your amount, this year we normally consider it as 0, mean it's a present time or our base year when you can say the game is going to start. Okay, so for example, if you are investing 10,000 today and you will get, let's say, 50,000 at the end of 6 year. How? The bank said that you will earn amount, or when if you are going to deposit that amount, so you will get, for instance, 10% compound interest rate. Okay, you just have to forget the idea that what is the simple interest rate, because simple interest rate is not a realistic things in today world. So you have just focus on compound interest, and your all course content will based on the compound interest rate. So whenever we talk about the interest, so you have to remember that we are talking about the compound interest rate. So just for understanding, it is okay to memorize a simple interest rate, but whenever you are going to do something practical, for example, if you are sitting an exam or in the classroom, you just have to memorize or give priority to the compound interest rate for your better grades. So what bank said that you will get 10% compounded, okay, annually on your principal amount. For example, we are getting 1,000 in year 1, so that is the interval. So how much you are getting? 1,000 at the end of year 1, and let's say 5,000 in year 2. So you might say this is the interest rate of year 2, or you can say that you are earning this amount at the start of year 3. You can say that because it starts from here and here. Okay, now look at, it starts from here to here. If you are getting this one, so you can say you are getting at the end of year 1. If you are getting this amount, you can say at the end of year 1. Okay, or in the next case, you might say that this is the beginning of year 3. Okay, so you are getting amount at the end. So what will be the case? Because if you are getting for a, let's say for a 6 year, we will get 3 to 4. That would be the force. That would be the case in, this is known as beginning of year 5. Okay, this is the beginning of year 5. For example, if you are getting amount in at the end of year 5, so you can say this is the beginning of year 6, because after 6 you won't be able to get anything. So you can say this interval might be possible at the end of year 5, or you can say that this is the beginning of year 6. Okay, so this is the interval. You just need to remember that how these things gonna work. So the last things, just to understand the overview of the time value of money. So before moving